You're doing well. Welcome to this Thursday Silver Smackdown edition live stream because today we have seen a significant pullback in the price of the precious metal, specifically silver. You can see here on this one-day chart, courtesy of SD Bullion's price of silver right now down about 4.26%. Earlier in the day, it was down as much as 5%. So a pretty steep decline, pretty big one-day move in the price of silver. But that is, kind of a hallmark of the silver market. It is a volatile metal and it can move fast to the upside and to the downside. And that is exactly what we're witnessing today. Now, if you've been following this channel for a while, you know that I have been calling for a bit of a pullback in the price of silver over the past week or so, a little bit more than that actually, because what we've seen leading up to this decline is over the past 6 months, the price of both gold and silver has been on quite a ride, quite a rip. The US dollar index has tanked quite a bit. It has become a bit oversold. Gold and silver have become a bit overbought. And so, we were kind of overdue for this correction, if you ask me. But the question now is not, is the price of silver going to fall? But we're already seeing that it is a bit. But the question is, how quickly is it going to recover? And how low will it go? How deep of a dip will this be? We're going to get into that in today's video. I'll give you some ideas of what you might expect with the price of silver moving forward after this decline. I'm sorry the camera keeps kind of going in and out of focus. I need to get a better phone to do these live streams, I guess. So what kicked off this sharp decline? What kicked off this 5% decline in the price of silver, now a little bit more like a 4%? Well, it was some data that was released today from the Bureau of Labor Statistics. At least from what I'm seeing, that appears to be the primary catalyst here. And that was this producer price index that was released earlier today. On an adjusted basis, the index for final demand moved up 2.3% for the 12 months ending in April. So that's a 2.3% increase year over year in this producer price index. If you're not familiar with the producer price index, basically what this is, it's a number that the BLS compiles, and it's based on data from businesses. Essentially, it's a measure of inflation at the wholesale level. On the BLS website, they say the PPI measures average change over time in the selling prices received by domestic producers for their output. And this number, 2.3% year over year, it is the lowest since January of 2021. So it shows that inflation, at least at the wholesale level, is declining. And that appears to have spooked investors in the precious metals. And there was also some jobs data that came out earlier today. It was the weekly jobless benefits claims. They had a sharp tick up for last week, and I believe they were the highest since October of 2021, if I'm not mistaken. Yeah, October 2021. Got to check my notes here. So again, this is a sign of a weak economy. The inflation is on its way back down, but there is more unemployment, jobless claims. And so, the idea here is, well, maybe we're going to get some kind of a deflationary decline. And, that means that we could see the precious metals sell off along with many other assets. In fact, that is what we have seen in the past. In 2020, we had a huge dip in the precious metals. That was when we saw the gold to silver ratio move to all-time record highs around 114, I think it was, because the decline was so sharp. Of course, that decline in 2020 was a huge buying opportunity because we saw the price of metals bounce very hard off of that bottom. Going to the chat here, we've got Delia saying it's time to buy some metals. And yeah, days like today are a good time to do some stacking. Right now, if you're interested in stacking, SD Bullion has got this sale, which was an email-only sale, but you can find it on the website. They've got these South African silver Krugerrands available, $3.99 overspot, any quantity. So that's good if you like to make small purchases. If you're a new stacker looking to get into things. Again, this is not financial advice or anything, but any quantity pricing is nice. you can spend a couple $100, get the free shipping, pick up some coins, and you don't have to pay the higher premium that goes along with making smaller purchases. And to me, 399 over spot for a silver Cougarand, a pretty good deal. Any sovereign coin, I might pick up some more of those. Although I am still holding off. As tempted as I am to pull the trigger, I think it's important to keep some powder dry right now, because let's talk about the possibility of, a deflationary decline, what it could mean for the price of precious metals and how they could be dropping a bit further. Now, this is a chart that I mentioned on the channel in a recent video. This is from clivemon.com. So he does technical analysis. I'm not really skilled one way or the other in technical analysis, but I can look at a chart that somebody else, kind of spells everything out for me. And this was published on April 24th. And he was pointing out that on the 5-year chart, seems like since that 2020 decline and the rebound in the price of silver, it's kind of been range bound. And you can see that the bottom of that range would be around 18 bucks, the top around $29, $30. And he called for a decline in that update. And he said, according to this chart, it looks like the possibility of a fall back down to 18 or 19 bucks looks like it could be in the cards. That's where the next support is. And, I think that is absolutely a possibility. Now, I will say that if we do see a spike down like that, there's a few caveats I want to throw out there. One, if we see a sharp decline in the price, the spot price of silver, one thing that could happen is you could see the premiums on physical silver absolutely explode. Because think about it, what could be a potential catalyst for a deflationary decline? Well, probably more trouble in the banking sector, if I had to guess. I mean, I guess there's the possibility of, a tactical nuke going off in Ukraine, or China launching an invasion of Taiwan or something. But more likely, I mean, this U.S. bank collapse that we've been witnessing, it seems to still be playing out kind of in slow motion at this point. And so, there's 186 banks out there that are at risk of default or collapse one way or the other. And if we start to see that manifesting itself more, especially as the Fed continues to hike rates, and we have these elevated rates, and there's all these assets on these banks' books where they have all these unrealized losses, these low yielding treasuries, if they're forced to unload those because people get spooked and they start pulling out their deposits from these banks, then that seems like the thing that's most likely to trigger a deflationary collapse at this point. And just look at what happened when SVB and Signature Bank and Silvergate, they all went under back in March. Well, the premiums on precious metals absolutely exploded. For a brief period before that, in February, we had junk silver was trading down around $18, $19 per, $1 face value of coins. Now, I'm not sure where the premiums are at right now. I know they're still elevated, like $26. They got up as high as 28 following that banking crisis. So if the banking crisis persists, even if we see the spot price of gold and silver selling off, I think that there could be a huge rush into physical metals as investors begin looking for assets without that counterparty risk. So they want to get their hands on physical metal, not a paper futures contract. And remember, that is where the spot price is determined. It's determined at places like the COMEX, where paper silver trades hands. That is what the spot price is. It is the price of the future months, the forward months future contract with the highest volume. That's how they derive the spot price. So remember, the spot price is not really even the price of silver. It's the price of a silver paper derivative. So while there is the possibility that we could see a sharp drop in silver, I still think it's a good time to be getting your hands on precious metals. Maybe I don't know, being a little greedy by waiting for a further decline. But there is also the possibility that, if gold and silver sell off, like everything else, maybe premiums go up a bit from where they are now, but you still might be able to get a better deal on the metals. I mean, remember back in September or October, there was a time when you could get a nice kilo bar of silver for under $700. That was, a nice time. And that was when I picked up, I think, I kind of get my stacking mixed up because I'm always trying to add something to the stack, but that was around the time when I picked up this kilo bar, I think. Again, I have to check my records, but I know that I got this for a lot cheaper than they're going for today. And, kilo bars are one of those things where the premiums, when you see the premiums spike up, they don't spike up as much on the large bars like the kilos and the 100-ounce bars. Although the premiums on the Engelhards, when I got this Engelhard, I think back in 2015, 2016, sometime around then, the price of silver was much lower, but the premiums on Engelhard bars were non-existent. I think I picked that up for close to spot, but now they seem to be a bit higher. But kilos, at least, still, even when the price of silver, the premiums exploded, you could still get those at a pretty reasonable price. Now, the other thing that was contributing to this decline in silver, it was this data, but also, this is a chart that we've looked at a couple times in recent videos. This is the commitment of traders data for silver, and you can see, it got just very overbought rather. When you see the short positions here, the commercial shorts getting so low, that means there's more and more short positions. The lower this bar goes, they are typically considered the smart money. And so when you see them shorting silver in a big way, you got to exercise caution. Now the reverse goes when you start seeing it like this, where the commercial short positions get real light. Even back here, this was in, when was that? That was back in September. Yeah, September, October, when the price of silver bottomed. You can see the commercial shorts actually, they weren't short. They went long on silver. And that was a screaming buy indicator for silver. I'm pretty sure I pointed that out in the video too, because I like to look at these commitment of trader charts. But now we're at the opposite. We've got the commercial traders shorting silver quite heavily. Now, this data is from last Tuesday, so there's some lag in this. This data gets accumulated on Tuesdays and then published on Fridays. So we won't know what the effects of today's smackdown had on the commitment of traders until next Friday. So again, there's quite a bit of lag in this data, but it's still a useful tool. The commitment of traders, looking at how institutional traders are positioning themselves relative to the precious metals can really give us some insight. Like I pointed out, this spot here you can see the middle of September, that was very close to the bottom in silver. You can see the commercial traders went long. And when you see that, that means it is time to stack. I was saying as much in videos back in September and October that it was an opportunity to have those low prices in silver. There were a lot of folks who said, oh, silver's dead, it's never going to go back up. It's going under 10. And, that seemed ridiculous because the cost of producing silver is so much higher than that. So anyway, it turned out that was a good indicator. But now, again, you got to exercise some caution here. That's why I am still holding off. Although I will say, today is the kind of day you want to stack on when you see the price of the metals deeply in the red. And I will also say this, that when the price declines, if we see a drop down to, I would say maybe 20 bucks in the spot price, I don't think I'd get any greedier than that. I'll be stacking, I'll be burning some powder. Let's put it that way. If we see a drop down to those levels in silver, and that is certainly within the realm of possibilities if we see, a deflationary sell-off across the board because of, say, some trouble in the banking sector or any number of things. Now, of course, while there is that possibility, there is also the very real possibility of a black swan event, and I say black swan, it's not really a black swan because you can kind of see these things coming, but say like, Saudi Arabia dumps the petrodollar, they start selling oil for yuan or something like that. There is the very real possibility of a significant devaluation of the dollar, but we could see some deflationary action before then because the economy is in the crapper. However, if we do see that deflationary event, the real risk here is not deflation. Deflation would almost be nice, if we could see the price of consumer goods come down because, hey, the PPI might have been the lowest since January of 2021, but the CPI still remains quite elevated at 4.9%. The CPI is the more important thing, if you ask me, because that is what measures the effects on consumers, not at the wholesale level. So, inflation still remains high. And if we get a deflationary crash of some sort where we see a major sell-off in assets, the reaction that the Fed is going to have will be astronomical. Congress will probably start passing bailout bills. They will require that the Fed monetizes all the debt, all the new spending, come in and buy treasuries, keep interest rates low, stimulate everything. We know that that has been the game plan in every financial crisis that we've seen over the past several decades. Basically every, decline in the economy that we've witnessed, it all is met with massive stimulus. Someone's asking in the chat, what caused the smackdown? Okay, so if you're just joining the live stream, I will mention that one more time because I kind of covered that at the beginning of this live stream, but we got this data, this producer price index. And again, it's odd that this would be the catalyst, but this seems to be it, right? We had this data released. It showed that inflation is slowing at the wholesale level. So PPI is a measure of inflation at the wholesale level. And it's at now the lowest level year over year since January of 2021, so 2.3% year over year. So that inflation measure slowing down was enough, seemingly combined with the the jobless benefits claims. You got to keep all these metrics straight in your head when you're doing a live stream like this, but also the jobless benefits claims popped up. It was the highest level since October of 2021, the end of the pandemic lockdowns and all of that. So we're seeing a weak job market, lower inflation at the wholesale level, and that seemingly was enough to trigger this sell-off. But again, I've mentioned this in several recent live streams. We were ripe for a decline. These numbers here, these commitment of traders numbers indicated that silver has just become a little bit overbought. It's gone up a huge amount over the past 6 months. And so in any bull market, you see corrections. But let's say we do get a deflationary collapse. Let's see. And I think that it would take some nasty economic news in the next week or so, or a couple weeks, in order to get the price of silver to go down to that 18, 19, $20 level. It would have to be something significant. But I mean, it could happen. And silver is a volatile metal, a lot more volatile than gold. I mean, the gold is down, I think, about 1% today. I haven't looked at the chart too recently, but its sell-off wasn't nearly as significant as silver's. But that's what happens. On the way down, silver moves faster. That's why when you get a big sell-off, you get an expansion of the gold to silver ratio. And that is also why when the bull markets in precious metals occur, when you see the price move up, you get a compression of the gold to silver ratio, because silver is just a much smaller market. I mean, remember, for physical silver, it's hard to know the exact amount that's above ground relative to gold, but Jeremy Corden, he referenced a 3-to-1 ratio of above ground gold to silver, meaning there's actually less silver above ground, and that's because it gets consumed by industry all the time, and it gets consigned to landfills and stuff in these tiny amounts that at today's ridiculously low prices just are not feasible to recycle. That was one thing that we saw in the latest World Gold Council report, was that in Q1 of 2023, we saw a higher supply of recycled gold. And that was interesting. It's because it's coinciding with a higher price of gold. The price of gold has gone way up. It's over $2,000. It's flirting with all-time highs. And so there's more gold recycling. It makes sense. And just like that, with silver, that's what you could see as well. If we get some kind of a major silver shortage, well, it's not like there will never be enough silver. I mean, you can have enough silver because there's deposits out there that can be mined that maybe aren't profitable at today's prices. There's all the landfills where you could have a lot of recycling. It's just that in order for those things to occur, what would have to happen is the price of silver would have to go up significantly. So, when I say there could be a shortage of silver, like we know there was a deficit of silver last year, one of the biggest in decades, actually. I think it was, 1.2 billion ounces of silver were consumed. And, the annual mine production combined with the recycling is something like a billion. So it was a significant deficit last year. And when you talk about, a shortage, it doesn't mean that there's not silver, right? It just means that the price is going to have to go up higher in order to allow silver to come onto the market. You typically don't get shortages in the sense that like things become unavailable until governments get involved and they try controlling the price. That is when you start to see real shortages, in the sense that you can't find things. It's when price controls come into play, or in some other just very severe circumstances. But the free market does a pretty good job of efficiently allocating scarce resources to the point where the price setting mechanism means that the people who really need silver, they're going to get it, because a higher price means that folks who don't need it as much won't buy it. I mean, it's just basic economics. But this is something that is lost on a lot of people today, and it's I guess has to do with the educational system, completely obfuscating real free market economics from the curriculum. We know that there's a concerted effort to hoodwink the public in regards to inflation and economics. I mean, why else would they have redefined the word inflation? You know what I mean? I mean, think about that. How Orwellian and newspeakish type stuff is that? When you start seeing words redefined to control public perception. But I mean, that's exactly what happened, right? If you look at a dictionary from 1971, when they took us off the gold standard, it defines inflation as an expansion of the money supply that could result in higher prices. But today, if you pick up a modern dictionary, it tells you that inflation is higher prices. So, I mean, think about that. It's a small difference, but it's very significant. When you change the definition that way, as a central banker or a politician, it allows you to expand the money supply. And then when prices go up, you go, oh, I don't know what happened. That's weird. And you get people like Jerome Powell saying, well, now we understand how little we understand about inflation. No, inflation is well understood. You make the money supply higher, you print a bunch of money, you monetize a bunch of debt. Guess what? Things get more expensive because there's more money chasing the same amount of goods. Or in the case of the U.S., as we've exported all of our manufacturing capacity, more money chasing less goods. So not a good thing. Anyway, I'm kind of going off on a tangent there. I mean, that is a feature of these live streams, I guess. Someone just said in the chat that the Cowboys are nice. Yeah, SD Bullion has some really cool Cowboy rounds. They're an exclusive from the Scottsdale Mint. Same folks who make these cool 5-ounce stacker rounds. $3.99 over spot. I think it's an any quantity pricing. Not 100% sure, but they're cool. Anything from the Scottsdale Mint is usually a pretty awesome work of art. And I think those are an SD Bullion exclusive. But anyway, the price of silver, could drop from here, significantly. But again, I would just view that as a major buying opportunity because any major deflationary crisis that we face, which causes a temporary sell-off in the spot price of silver, ultimately likely is going to drive a lot of interest into the physical market, just like what we saw in March when SVB and Signature Bank collapsed. And also, it's probably going to incite a tremendous reaction from the government and from the Fed. They're going to come in and they're going to stimulate markets. We already know that their plan is to bail everything out if it really gets squirrely out there in the economy. I mean, that's what they did with all of these troubled banks. They bailed out, okay, maybe they didn't bail out the shareholders, but they bailed out the depositors. And in the case of some of these other troubled banks, with the Bank Term Funding Program, the BTFP, they're taking all those troubled assets, those low-yielding treasuries, onto the Fed balance sheet and then using them as collateral for loans. So, I mean, this is essentially QE. And that's what we saw when SVB failed. And if we start to see more bank failures, they're going to be expanding the balance sheet a lot more. I think we will probably hit $10 trillion on the Fed balance sheet before we ever see 8. That is a forecast that I have been making for a while now. And that is one that I absolutely stick to. So, I wouldn't worry about this decline in the price of silver. If you're a stacker and you're getting into physical metal, this is a very long-term play. This is not something to speculate on the short-term moves in the price of silver. If you want to do that, use an ETF, maybe use PSLV, SLV if you're really bold. I don't really touch that one anymore. I've traded it a little bit in the past, but then, when you realize that JP Morgan, who I believe is the custodian of SLV, they had those nickels in a warehouse that turned out to just be bales of rocks. Do you really want to invest in that kind of paper silver? Not for me, thanks. Just my take, not advice or anything, but PSLV, that's run by Eric Sprott. That's probably a little bit more reputable. If you want to speculate, those paper silver instruments that you can move in and out of a little more easily or more appropriate. But if you want to insure yourself against counterparty risk, the collapse of the banking system, you want to get some hard assets outside of the banking system, and you want to do something other than pull out cash, because what will happen is if you pull your cash out of the bank, yeah, you got it, but then as the banks get bailed out, it's just going to be eviscerated by inflation. And so, metals, they are the hard asset that have served as an inflation hedge for thousands of years, never gone to zero. There's a tremendous amount of demand, especially for silver, in this high-tech world of, solar and electric tech, EVs, all this stuff. All this stuff uses a ton of silver, and there's going to be new applications for silver moving forward as well. That's something that doesn't get talked about a lot, but I mean, we've got AI coming up with stuff now. I mean, who knows? Who knows when you get a general artificial intelligence that emerges, what kind of applications it's going to have for silver. I mean, maybe we'll get, hoverboards or flying saucers. I mean, really, the sky's the limit today in terms of technology, and that sounds goofy, I guess, except for the fact that, silver is very unique among all of the elements. This stuff was created in the heart of supernova billions of years ago, and there's only so much of it around, and it has very unique properties. It is the best conductor of both heat and electricity on the periodic table. So if you don't think there's going to be new demand for this material in the 21st century, I think you've got another thing coming. Unless we have a strategic nuclear war something, we all go back to the Stone Age. But then, hey, you can make some antimicrobial flasks like the ancient Greeks used to drink out of your silver, right? Because you're going to need to purify your water sources because municipal water probably won't be available. Anyway, just a tangent. A few more people in the chat there asking what caused the decline. Again, if you're just joining, real quick, it was this data. I know it's kind of hard to find out just Googling it, why silver is declining like it is. Well, it was a big pullback because of this weak PPI inflation data and also increased jobless claims. So threat of a weakening economy. And so that's what makes me, think that maybe some kind of a deflationary event may be on the horizon. If it is, silver's still something you're going to want to hold, if you ask me, because the reaction to that deflationary event is going to be massive money printing. It's going to be inflation out of control. I mean, yeah, we might see inflation decline in the short term. CPI is still at 4.9%, folks. So it's not like this data was, indicative of a huge salvation from inflation. We're still seeing prices at the consumer level increasing, but wholesale inflation declining and more jobless claims have spooked the market. A lot of it had to do with the fact that silver has just been on a big rip. It's normal to see assets correct when they go on a big rip. And I've been calling for a pullback. It looks like it's here. The question now is how deep is it going to go? I think that today is a fine day to do some stacking, down 5%. That's a nice discount on some bullion. SD Bullion has those Krugerrands for sale. They've still got those 5-ounce bars for sale. Someone was saying that it's hard to find right now quarter-ounce gold. Yeah, I mean, any individual gold product might be tough to find in today's environment. You just got to kind of buy what's on sale. SD Bullion, they've got the 1/10-ounce Britannias. Now, they do have King Charles on them, so that might be a deal breaker. It seems to be for some people. But they do have the 1/10-ounce Britannias with King Charles face on them for, I think, $24.99 over spot. So not a bad deal for fractional gold, especially in today's environment. They're not quarter ounce. I'm not sure what the quarter ounce Britannias are going for, but the quarter ounce, or rather the Britannias in general, seem to be one of the better options for gold stacking at the moment. The premiums seem a little lower there. And hey, if you want really fractional gold, don't forget, I don't have any with me right here, but you can get some gold backs at Alpine Gold Exchange. There's a link down in the description. It is an affiliate link. If you use it and you buy something, it does help support the channel at no additional cost to you, but they have some excellent prices on gold backs over there. SD Bullion has some good prices too. I think on the 50 gold back notes, they have the better pricing. On just about everything else, Alpine Gold Exchange, a little bit lower. They've got some cool stuff over there too, where you can get free storage, allocated storage of your gold backs. You can lease them out and get interest on them. You can check out the interview I did with Jeremy Corden on Friday to find out more information about that. I'm sorry, it was published this past Sunday. But that was a interesting interview about gold back. So if you want some fractional gold, that's always something to take a look at. I know it's a very polarizing topic in the bullion market, gold back. Some people seem to really just get triggered by those things. But anyway, I like them. I think they're cool. I think they're an interesting approach to hyper fractional gold. I still like my gold coins, my silver coins. I'm not trading out all my bullion for gold backs. That's kind of the maximalist approach that Jeremy espouses, but still, they're neat. And I think they're an interesting part of your stack and have some potential for significant appreciation. But anyway, this pullback, in the price of silver, it's an opportunity. It might go lower, very well could if we see some bad economic news in the near future. Gold is still well over 2,000 bucks. So I'm wondering if that is the floor in gold. I mean, I was kind of anticipating when I started calling for this pullback that we would see a decline of gold below the $2,000, like well below. Silver declining significantly, but gold's showing that it's pretty resilient right now. And I can't say that that's too surprising. There's a tremendous amount of demand for gold right now around the world. I mean, I pointed out in the live stream yesterday that in Q1, there was record gold buying among central banks. Now, not for a quarter, but for a first quarter. And those quarterly records started being kept in 2000. So Q1 of 2023, the best start to a year for purchases of gold by central banks and institutions. Just look at Singapore. the Singapore, they increased their official gold holdings by 45% in Q1 of this year. Silverbone says gold 1960 is coming. Yeah, very possible. If we do see some deflation, I mean, you could see gold decline well below that $2,000 level. But again, I think it'll be a spike down if it does happen, and then a spike right back up because we know that the reaction by the powers that be to any significant deflationary decline will be to print, to stimulate. And I mean, in today's environment, if they go on a printing spree, that could kick off, hyperinflation. I mean, it really could. It sounds like an extreme call. And if you had asked me, back in 2019, I think I had this channel up and running in 2019. It's been a couple years now. Thank you, everybody who has, subscribed to the channel and who has stuck around. If you've been around for years, especially. But if you'd asked me back then, will the U.S. experience hyperinflation? I would say, well, theoretically it's possible, but not very likely. I mean, the dollar's the world reserve currency and all that. But look at whatever has changed since that time. We've got this de-dollarization campaign around the world. Excuse me. We have central banks loading up on precious metals. We've had this tremendous bout of inflation, which is continuing to persist. I mean, the media seems to say, oh, 4.9% is a big decline in inflation. Really? Is 4.9% increase year over year in prices a small thing? I don't know. It seems like a lot to me, especially when, you are actually shopping and you know that the inflation is higher than that. Premiums are ridiculous. Silver Stormy Normie says, well, listen, premiums on silver, you got to remember what those are, okay? The spot price is the price of a paper derivative of silver. So premiums are the price of real physical metal. I mean, you can go out and you can buy a futures contract for the spot price, no premium, right? You want to hold paper silver at a time like this, when the banks are collapsing. You want to hold an SLV ETF, you can get that right around spot, no premium there. But for me, I'm willing to pay a few extra dollars to get the real thing, not a paper derivative. Because here's the thing, most of the time for just daily price action, futures contracts are fine, I suppose. SLV even's fine for speculating. It's nice. You can trade options on it and all that stuff. But when you really want to hold gold and silver, I mean, the time when you really want to hold precious metals is when there's some kind of an existential crisis in the economy where you're facing, the potential destruction of a currency, you're potentially facing massive shifts in the way the global economy does business. And that is when holding paper silver is not going to do you any good. That's when you got to have the physical thing. I mean, just look at what happened with the price of nickel in the nickel market last year. I know I'm kind of diverting a little bit, but this is the main example of why only physical gold and silver really will do. Because we saw a huge short squeeze in the nickel price last year following the Russian invasion of Ukraine. There was all this speculation, they make a lot of nickel there, I guess. There's going to be problems in the nickel market. The price of nickel shot up more than 100%. It went up from, I don't remember the price level it started at, but it was low, and it went up to $100,000 a ton or something like that, from maybe $20,000. I don't know. I'm spitballing on those numbers, but it went up, I think, 230% in a day or something along those lines. I mean, it was a massive short squeeze. And what happened? Did the people who owned those long nickel contracts get rewarded for betting correctly? No, the trading got halted by the LME. And they basically screwed all of the longs, and they didn't allow anybody to close out those positions. And they saved their billionaire buddy who would have been crushed, this nickel magnate guy who had this huge short position. I mean, they completely rewrote the rules just to bail out their friend. And so, when you see that happening, do you want to have paper, silver, and gold? I mean, what will happen if you own a paper futures contract and, hyperinflation kicks in? Well, I'll tell you what's going to happen. A few lucky folks will be able to get their contracts settled in physical bullion. They'll run out at the warehouses. The price of physical metal will go through the roof. The spot price will remain lower. And all of those folks left holding the bag, the people who lose the game of musical chairs that is played every day at these commodities exchanges, will have their positions settled out in fiat currency, rapidly devaluing fiat currency. I mean, that is very likely what we would see play out in the event of a significant bout of inflation or hyperinflation, something that drives a huge amount of investors into the safe haven of physical metals. And this is not like a high probability event in the terms of, it's going to happen tomorrow or the next day or the next day or the next week or the next month or whatever. But when you look at the situation in the economy, I mean, we've got $31.7 trillion in debt. Now we've got like a $2.2 trillion annual deficit. We've got, politicians squabbling about this debt ceiling while they're completely ignoring the fact that, we're screwed whether the debt ceiling gets raised or not because they refuse to address the real underlying problem, which is the tremendous amount of spending. I mean, there needs to be austerity. That would be the responsible thing, but that is not politically viable. The electorate will not stand for that. And so they will continue electing these politicians who just spend, 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 try to give everybody stuff for free from the government. Of course, the most expensive stuff you're ever going to receive is free stuff from the government because it's going to debase the currency. And it's not like this is the first time this has ever happened. This has happened countless times in history with many fiat currencies, and it very likely will play out again. Now, I mean, when? I don't know. Could be next year, could be tomorrow if, the right chain of events plays out. It might be a decade from now. I don't know. Maybe it won't even happen in my lifetime. I mean, maybe the dollar will be incredibly resistant to the forces of inflation. Maybe it'll be different this time around. I don't think so. But again, you never know what you don't know, right? I mean, it's impressive to me that the dollar is still around now with the way things are at this point. So clearly it is more resilient than a lot of people expect. But I think it likely will be one of these things where it changes slowly and then it doesn't, then it changes very rapidly. And when that happens, it will be too late to get into precious metals. The time is now to be stacking. Days like today, when you see a pullback, are good. If we see a further pullback, it will be even better, right? That's what I'm saying here. Silver down 5%, good time to buy. Silver down 20%, amazing time to buy, right? It's just a matter of accumulating as much of this stuff before that day comes because I do think it ultimately will be inevitable. It probably, I mean, educated guess, going to happen in my lifetime, assuming I live a natural lifespan. And the same goes for many of you watching because I think that the writing is on the wall here and that the dollar's days are numbered and that this system that we have is not sustainable. And, one thing about the universe and nature is that things that are not sustainable will not be sustained. And so, how much longer do we have to take advantage of these prices in precious metals, these historically low levels, these unimaginably low prices for this, one of the most useful elements on the periodic table? I mean, silver, honestly, of all the commodities out there and all the materials, aside from petroleum, silver really has more uses than just about anything else. Oil, admittedly, you can do a lot with oil. It is the world's most important commodity, but I think silver is a close second. It doesn't get a lot of respect for that purpose. And, the price likely is somehow manipulated via paper markets. I'm not going to speculate as to the extent that goes on because that is nothing but pure speculation. But we know that the price of gold and silver are manipulated. I mean, JP Morgan traders have been indicted for that. They paid nearly $1 billion in fines. So this is not like, tinfoil hat stuff. This is mainstream news. You can go to the Department of Justice, just Google JP Morgan gold spoofing, and you'll find plenty of evidence that the precious metals prices are manipulated. But again, this is not a sustainable thing, right? When you have a material that is so useful, it's used in so many ways, if you manipulate the price low and you hold it there long enough, eventually you run into a shortage. And very likely that will become quite apparent when the dollar's death knell sounds. Now, when is that going to be? I don't know. Probably not tomorrow, just FYI. This is a long-term holding. It's real money. It's just, when everybody else is being irrational, when you see everybody just chasing these paper assets and, saving fiat currency, like, hey, great, you can now interest rates are higher. You can get 3 or 4% in your bank account. Never mind that the CPI is still over 4%, it's at 4.9%. So even if you just go by the official numbers, even if you're earning 4% in a savings account, you're losing almost 1% of purchasing power every year. So, I mean, think about that. Do you want to be in paper assets in that kind of an environment and where we have a $2.2 trillion deficit and where, we have debt and where we have countries around the world dumping dollars for their bilateral trade and they're moving into local currencies. And then you've got countries like Iran and Russia exploring gold-backed stable coins, to settle trade using precious metals once again. I don't know. I want to have some hard assets. It doesn't mean don't have any cash. You want to have cash because cash is what you buy metals with, right? It keeps some paper dry. And also you got to pay your bills, right? You got to pay your taxes, you got to pay your bills. So you got to have some fiat. But in terms of a long-term store of value, I mean, it's crazy to be sitting on large amounts of fiat currency right now, in my opinion. You trying to get rid of those Scotties? Never, Nathan. Stay away from my Scottsdale Mint bullion. I don't know. I mean, I'm not that attached to any of these individual pieces of bullion. I would sell just about any of them for fiat currency, even if the price was right, I guess, if I thought that I could roll that into other assets. It's not like I'm a permabull on silver. If silver goes to $100 an ounce, it depends on what else happens, but I probably would sell some, right, just to eliminate any, debts I might have or whatever. I think that's a good approach. That's one of the ways inflation can benefit people with hard assets. If you have some debt, let's say you got a mortgage or a car payment or something like that, sell a little silver at an elevated price, pay that off cheap in devalued currency. Yeah, these are 5 ounce, Nathan. They're the only ones I've got. I would like to get some of the 1 ounce and the 2 ounce stackers. They're pretty sweet. Stack them up like that. Makes a nice little silver stack. Pretty cool. I like Scottsdale Mint. Thank you, everybody who's tuning in today, by the way. Do smash the like button if you're enjoying the video so far. Subscribe if you haven't subscribed yet. If it goes to 100, time to change it to gold. Ralph Hart says, yeah, exactly. If we see a huge run up in the precious metals, like let's say we see the gold to silver ratio compressed to 20, you're still going to want to hold on to all your silver? No, heck no. I'm going to sell some and buy some cheap gold. It'd be nice to not lug around a bunch of silver, get some nice lightweight gold. It's just that right now, in today's environment, I mean, look at gold. Gold's knocking on all-time high levels. I think the inflation adjusted all-time high for gold is still a ways off. It's about $2,600, but the inflation adjusted all-time high for silver is like $196 or something like that if you adjust the 1980 high. So, silver is way off of its all-time high. So this to me, I like gold too. I mean, there's nothing wrong with gold. Gold's cool. Gold's very compact. It's a very well recognized monetary asset, but silver, I think, is where the real opportunity is. And again, I'm not giving you financial advice. I'm not telling you what to do. When I say that everybody's situation is different, that is a fact. That is not just something I say. If you got a bunch of credit card debt right now, don't go out and buy silver. Pay that high interest credit card debt off. I think that that's a sound approach. But if you're looking for a way to save money outside of the financial system, you might want to take a look at some precious metals because they've been money for thousands of years. There is no Roman bank account that is still around. There is no currency from the 18th century, a paper note that you can still buy anything with. Maybe it has value as a collectible or in a museum or something, but you could have a gold coin from Roman times or a silver coin from the 18th century or whatever. I mean, any time historically, if you had a time machine, you could take this Scottsdale round back 500 years and you could go buy something with it. I don't know what you'd buy in the year 1500. Maybe some potatoes or something. I don't know what medieval folks like to buy. But the point is they transacted in silver. Back then, silver was actually the more common currency than gold. For most of the world's history, silver has been the currency of daily transactions. Maybe some wealthy Italian merchants were doing transactions in gold because they were just transacting such large volumes of goods. But your average everyday person for the past, 2,000 years or so, or if you go back to the Lydian kingdom when they first coined gold and silver, then you're talking like 2,600 years ago, folks have been buying things with gold and silver. And it's really only in modern history that we have abandoned that completely for a 100% fiat global system in which the precious metals really have very little role. Now, I mean, I say they have very little role. Look at what central banks were doing in Q1, stacking up massive amounts of gold. So banks, central banks, they know that precious metals are money. They know that gold is a tier one asset. That's why they hold it, and that's why they've been buying it at a record pace ever since all this geopolitical nastiness kicked off last year following the Russian invasion of Ukraine and all of the geopolitical instability that has brought. Central banks are stacking hard assets. They know that in the environment that we are entering, you want to have hard assets. You don't necessarily want to hold dollars, which have been weaponized, which can be frozen or which you can be locked out of using. No one can lock you out of using silver. I mean, I guess you could confiscate gold and silver. Kind of did that back in the 30s with the executive order and all that. But my understanding of that is that very few. First of all, they didn't confiscate any silver. I mean, silver was still circulating at that point. The coins were still made out of silver, and I think only a very few number of people were ever prosecuted under that executive order for gold confiscation. So if you were smart and you just held on to your gold and you defied the executive order, you probably turned out just fine. And then in 1971, I think that's when they made it legal to own gold again. The same time they took us off the gold convertibility. You just had your coins and nobody really thought twice about it. So, in terms of gold confiscation, the logistics of it favor the stackers. Let's just put it that way. I won't go too much into that. And, there's boating accidents and all that as well. But anyway, yeah, silver's pulling back. Let's take a look before we wrap this up at where the price is at now. I'm curious. I mean, these markets move quickly. Silver's volatile. Where are we at right now in the silver price? We are at about the same 4.22% decline. Remember, we were at about 5% at the lowest part of the day. It was because of the war, right? Well, I think that the decline today really was triggered by this your Bureau of Labor Statistics report showed inflation is slowing. Investors are worried about deflation. Very likely that that could be a problem considering all the problems going on in the banking system. Anyway, thanks for watching, everybody. I see there's a lot of viewers today. I do appreciate you all tuning in. Smash that like button. Don't forget to subscribe to the channel, and I will catch you next time. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker out.